Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Indian equities are set for a slightly higher start after closing at that milestone mark of 20,000 for Nifty. GIFT Nifty indicates mildly positive start coming in for Indian equities. US market on the other hand ended mixed Wednesday night after a moderate increase in the inflation data, which perhaps sparked concerns around the rate hikes. Talk about Asian market trading higher despite the mixed cues from Wall Street. FIIs sold shares to amount of 1,630 crore. DIIs on the other hand bought equities to an extent of 850 crore. Let's talk about the F&O cues. FIIs have been net buyers in the index futures to an extent of around 1,268 crore. Sellers in index option, they've been buyers for stock futures. Along with that, they've also been buyers in Bank Nifty futures. Overall, it's a trend we're seeing most of them being buyers at least for stock futures, index futures, Bank Nifty futures, but they've been sellers for Bank Nifty options. Let's talk about the F&O ban. New in ban, RAC still remains in ban. India Bull Housing Finance, Delta Corp, Hindustan Copper, Manappuram Finance, SAIL, India Cements, IEX, National Aluminium Company. What comes out of the ban? BHEL and Chambal Fertilizers. Let's talk about the option cues. Nifty PCR now a little bit seems to be on the oversold territory. 1.25 compares with that of 1.18. But let's get to know more about the trade setup, strategy of the day, and F&O updates with Chandan from Motilal Oswal Financial Services. We're going to be talking to him in just a bit. But let's address the stocks and news first. Bombay Dyeing. Well, the news has been, circulating around, it's been doing the rounds for a couple of months, so to say. And finally, the announcement has come in where the company is going to be selling in land parcel at Worli. Look at that. The company already clocked in upper circuit limit of 20% in previous session trade. Let's see how is that stacking up in today's session. It's going to be selling in the land parcel of about 22 acres in Worli. It's going to be selling that to Sumitomo Realty subsidiary. Deal is going to happen in two phases. This is going to be happening in for a total consideration of roughly 5,200 crore. And with this, the company will receive 4,675 crore in the phase one itself, and the remainder money will come in phase two. What I also wanted to highlight is the sugar space is expected to be in focus. There is a brokerage report, DAM Capital, in fact, has initiated coverage on the sugar stocks, Balrampur Chini, where it's initiated a buy rating, target of around 510 per share. Shveni Engineering, again, there is a buy rating initiated for that one for a target price of 450. And Dalmia Sugar too, there's an initiation at 540, along with that of Dwarikesh. Overall, the brokerage believes a fast developing El Nino condition would further hamper sugar production, believes that El Nino condition will keep the sugar prices about 37 rupees per kg. This is expected to benefit sugar companies with higher sustainable volumes. Hence, you could see the big base, well-integrated players' name in that list. It expects the realization to be higher and expects the sugar companies to witness strong earning growth for FY23 to 26. What I also wanted to address this morning is Reliance Industries. Reliance Retail has been making noise for all the right reasons. It's in talks for new investment worth around $1.5 billion with Gulf Singapore funds. The talks with the investors are part of an internal target to raise $3.5 billion. The company aims to close the target by end of September. This is what we have in terms of Reuters report. And also do bear in mind the fact that it's a weekly expiry. We are also going to be looking at L&T, where the 10,000 crore share back issue is going to be opening in on September 18th and would be closing in on September 25th. Keep an eye out on this one and see if you can see some momentum. Let's look at the IPO. Two of them actually come up for subscription, and both of them instead are really interesting. What I'd want to highlight first is SAMHI Hotels. Now, SAMHI Hotels is essentially a hotel company, as the name suggests. It's been a loss-making entity for last 3 consecutive years, so to say. But what really worries the investor is the deleveraging profile, or just say the leverage profile of the company, which seems to be on the higher side for this one. Well, the open, at least if you look at what we have to say in terms of, the basics, the total issue is around 1,370 crore. Out of that, fresh issue is 1,200 crore, and OFS is to an extent of 170 crore. So that's that when it comes to the entire, fundamental or the basics of SAMHI. It's going to be opening in for subscription today. And we spoke in the IPO price band is to an extent of 119 to 126 per share. We spoke to the management as well there. It's a good turnaround story which is waiting to be unfold rather. The management spoke about the company turning profitable soon enough, the company wanting to, the fundraising just being the part of the deleveraging journey. In terms of the peer group comparison, if you see EV to EBITDA, fairly decent valuations, 14 times compares to that of 27 times to 22 times of other group companies. We're looking at EV to EBITDA perhaps because the company on, it's not a profit-making one. So PE is not something that we'd like to watch out for companies like this. The other one that we have on the list is Zaggle. Of course, now you have Madhukela along with that of Ashish Kacholia. These are the two big investors which have picked up stake in the companies. That remains to be seen. But we are going to be addressing about this and more in just a bit. But let's actually get on first to the fundamental side and understand if we are looking at some amount of traction coming in for sugar stocks where the initiation report has, been undertaken by DAM Capital. Let's look at that. But to bring in more perspective, we're being joined by A.K. Prabhakar, Head of Research, IDBI Capital. Morning there.
Good morning.
All right, I'm going to start off with your assessment. A, weekly expiry. B, what do you make out of the US inflation data for the Indian equity markets? And which are the pockets that look interesting after Nifty is clocked in that 20,000 mark?
Okay. No, weekly expiry is not something I understand.
Sure.
So, no,
it's just some amount of volatility that one could expect given that the milestone of 20,000 mark has already been conquered. Do you think US inflation data will be something which perhaps will have more bearing on the Indian equity markets, so to say?
So, no, for me, index doesn't make a big sense. If you really look at the index component, 10 stock dominate almost 70% of the weightage or more than 70% of the weightage. So only 10 stock is what we are talking about when we talk about Nifty. So Nifty was, about 22 months back, it was 18,600. Today it is 20,000. So, it has not given any rally. But, I'm more of a stock specific person. So where, the returns have been very good. You take defense PSUs, there are stocks which have given 100% return. So we need to be more sector specific and stock specific rather than looking at Nifty. Nifty doesn't generate that kind of return. For a person who is looking at margin of safety, Nifty is better. But somebody who wants to create wealth, you have to look beyond Nifty. So I think there are a lot of pockets where you can create wealth.
All right. Mr. Prabhakar, also let's talk about sugar stocks. What do you make out of it? Do you think it's going to be an interesting time for these stocks right now? Do you see more momentum building in? How do you find the valuations of these companies?
Sugar companies' valuation are very attractive. They have repaid their debt. So many sugar companies are debt-free companies. And with sugar prices moving higher, I think sugar stocks are likely to benefit. Balrampur Chini, EID these are few good companies. There are many in the pack. Yesterday also I read some news that Renuka Sugar is going to buy one unit which is having 4,000 tons per day crushing capacity. Renuka Sugar is a turnaround candidate. But you have clear companies like Balrampur Chini, EID Parry. So we can look at these kind of sugar companies which will create long-term wealth also.
All right, Mr. Prabhakar, we're being also joined by another guest, Chandan Taparia, who is the Senior Vice President, Heads Derivative and Technical Research with us. We also wanted to chat about essentially it's a weekly expiry and there's a US inflation data cues which has come in 20,000 mark has been finally scaled on the closing level for Nifty. Do you see weekly expiry changing that anytime soon? And also your perspective on PSUs, because they've hit a 13-year high. How are you looking at the space?
Good morning. Thanks for having me.
Pleasure.
So we have seen good momentum in the market in last 3 weeks after the small consolidation in the month of August. The index is continuously making higher highs, higher lows, managed to surpass the previous high of 19,991, and base of the market is shifting higher along with positive data setup. So as of now, till it holds above 19,800 zone, we will continue to remain bullish and expecting index to hit to us fresh high of 20,250 to 20,500 marks. If I look at the data setup, FI's long short ratio again improved to 62%. Put call ratio is holding well above 1.3 marks. India VIX is comfortably below 11.5. So lower volatility, rising put call ratio, better FI's index long short ratio, and higher base of the market, indicating the bullish momentum could continue. Now talking about today's expiry. So if I look at the weekly basis, the index is up by around 1.2%. And right now it's trading near to 20,070 marks. And volume weighted average for the week is near to 20,000. And we are 70 points higher than the VWAP. And in fact, we have seen put writing and call unwinding at 20,000. So because of that, we believe 19,980 could act as a support, and this rally can extend to 20,150 for two-day point of view. Those who are looking for trade in Nifty for option point of view for expiry, they can go with buying of 20,000 call, or can initiate buying 20,000 call, sell 20,100 call, initiate the 100-point spread in the Nifty index.
Okay. So
and now coming to your question on CPSE index, we are positive on most of the public sector enterprises. In fact, we are quite bullish on the CPSE segment. This index is up by around 35% in this year, overall making high top, high bottom. We are positive on the PSE defense, even shipping, power, energy, and PSU name. So talking about PSU, we have seen breakouts in counter like Canara Bank, built up of long position has seen. It has given a decisive hold above 350, 355 zone. So momentum could accelerate here. One can buy with support of 352, and this is stock has potential.
We'll get back to you in just a bit. Let's actually address the market open there. 0.25% clocked in on Nifty 50 right now, 20,100 mark, above that level. We're comfortably sitting above that 20,120 mark. Of course, it's a new milestone coming in for the markets. And look at the screen right now. Euphoria is running across the street, and we're acting no different. Let's look at Bank Nifty. How is that stacking up for you early this morning? Well, Bank Nifty, 0.3% clocked in for Bank Nifty, and 46,000 mark, way above that level. It's indeed a beautiful start to the day. Good opening coming for markets, mid-cap and small-cap index. Let's actually look at that. Mid-cap index, we're looking at gains to an extent of 0.75% clocked in on the mid-cap index, and small-cap index perhaps, which has seen carnage in one of the days, perhaps day before yesterday. Look at the screen. It's almost 1% odd clocked in early deals, just how we saw in yesterday's session. It's just an extension of that. So one session of blip, and you could see the bull run being continued, or the euphoria rather extending for the Indian equity markets. Let's look at Nifty IT. It's doing well, 0.4% clocked in even for that one. And if you talk about the other sectoral indices that we have on the chart right now, something like a pharma index is doing well. Well, the entire defensive space, beg your pardon, has lit up. FMCG is acting no different. 0.1% of gains clocked in even for that one. And the consumption story remains intact, with gains to an extent of 0.3%. Let's look at realty, let's look at banking, and also the auto index. Well, auto index gains to an extent of 0.6% out there for the auto index, and realty index acting no different. Perhaps a bit of outperformance coming in from that one to an extent of 1% PSU Bank, well, they are continuing their momentum scaled in the previous session, gains to an extent of 1% on the index right now. Let's look at the top gainers and the top losers that we have on the list right now, just to see where the momentum has been stacking up early this morning. Well, look at that. Tata Steel, Hindalco, and Coal India, essentially the metal names, have been doing well in trade today. Tata Consumer Products along with Wipro and Adani Enterprises. These are some of the other top gainers that we have on the screen right now. M&M, IndusInd Bank, Divi's Lab 2 participates into the early rally that we're seeing for Dalal Street. And also let's actually look at the top losers if we have any, because the market breadth right now seems to be fairly divided in the favor of advances. Adani Ports, HUL and ITC. These are some of the top losers that we have on the screen. Essentially 48 advances against 2 declines. Market breadth clearly in the favor of advances right now. Chandan, come in on this one. What do you make out of the splendid start that we have to the day? What is the next level that you're looking at? And would you still have the same suggestion in terms of 20,000 to 20,100 call options for our viewers out there?
Yeah, the suggestion will continue. Use any small decline as a buying opportunity. With support of 19,980 or 20,000, will play for 2150, 2200. So one can be with 20,000 call, and if momentum continues and doesn't get deep, then we can even shift to 20,050 call in Nifty Index.
All right. Anything that looks interesting on the chart? You were talking about Canara Bank, of course, and PSU banks, along with, beg your pardon, the entire space which you found attractive at this point of time. What's your suggestion on that one?
Yeah, so positive on the PSU bank. In fact, we can look at counter like SBI, Canara Bank. So SBI, I can suggest to buy with support of 585 for target of 620, 625. Can look at Canara Bank with support of around 356 for target near to 380 plus levels. Apart from that, positive on the selective pharma name, including Oro Pharma, which is given a consolidation breakout.
How about something like sugar? Do you like that space? It's an initiation report has come in, and of course we were also having a chat with Mr. Prabhakar some time back, who's talking about the valuations being attractive, at least from the fundamental side. What do you make out of it from the technical charts perspective?
Yeah, definitely. Yeah, I like sugar a lot. Festival season is there. So without sugar, we can't enjoy the festival. Chart-wise also, we have seen a breakout and retest of the breakout in most of the sugar name. So if I especially talk about Renuka sugar, it was finding earlier hurdle near to 48.80, and recently it made to 55. Again, retested the support near to 49. So role reversal is previous resistance is now acting support. So I believe with support of 50, one can look for 56, 57 in Renuka, even counter like Balrampur Chini. However, this stock easily comes into the FNO bend period. But I think this time a move beyond 425 can take it to 460, 470. So Renuka, Balrampur are a couple of names which will be in focus, and overall positive stance in sector-wise will lead the momentum here as well.
Right, Chandan, last question that I have right now is talk about L&T and BSE perhaps. Buyback coming in, the record dates rather. What do you make out of the charts? Do they still look attractive, especially for BSE, which has seen a sharp upfront from quite a while, and perhaps is one of the top performer category mid-cap stock that we have?
Yeah, it's your last, but stocks are not listed. So we are quite bullish on these names. BSE itself has seen the good momentum in last couple of days. Stock has rallied by 138% in this year, up by more than 50% in last 2 months. So momentum could continue. However, we have seen good rally. But as of now, I believe that 1200 could act as a major support for the momentum towards 1450 to 1500 levels. L&Ts are preferred pick in heavyweights. Capital goods could continue to be in limelight. Capex theme will play well. So use any small decline. Just a couple of days back, it hit 3,000 plus marks. So let it decline to 2850, 2800 and accumulate again it for 3,000 to 3,200 level in L&T.
And how about BSE? You said that you're not looking at the chart right now for this company?
Yeah, BSE, Bombay Stocks is quite positive. I already discussed about BSE. Looking for a support of 1200, use any small decline to buy, look for target of 1450 to 1500.
All right, Chandan. Thank you so much for taking out the time and joining us this morning. Let's navigate our discussion back to A.K. Prabhakar, who's the head of research at IDBI Capital, and of course, ask him about how is he looking at the markets right now. It's an euphoric start to the day, well above that 20,100 mark on opening basis. How are you looking at it, Mark? How are you looking at the markets right now? What do you think could be the factors which could further drive the rally here on?
See, the GST e-way collection has been one of the highest, and that means the business has started to pick up. Now, so retail as a segment will start to see some improvement on the ground level. So I think the economy is starting to do well. So there are many pockets where value are emerging. There are few pockets where it is highly overvalued. So we are avoiding defense pack, PSU defense pack now. But I think there are few other PSUs which are relatively attractive in their valuation, like GAIL India, NMDC, and even SAIL is looking attractive. And power stock is still looking good. Tata Power is something we like. Blue Dart, is getting into a lot of pin codes. So Blue Dart is one more stock we like. It is not performed for last few years, and now it is starting to perform. So Blue Dart is something we like. PSU banks is something which is not rallied for a very long time. There we like Canara Bank, Bank of Baroda, PNB, Bank of India. So even State Bank of India. So PSU banks is something which we think will start to rally from here on. So there are a lot of pockets of value. We need to look where value is emerging, and there if you can invest, I think in next 1 to 2 years, 25-30% return is possible in those stocks.
Sure. Also, let's talk about something like railway stocks, because there's a lot of euphoria around them. Most of them continued to be on pressure on Tuesday, but yesterday's session was a bit different. There is the bull camp argument that it is a structurally long-term story, which still remains intact. But what about the valuations? What about the fundamentals? How are you looking at it?
We need to understand even in PSU defense, at one point of time, they were trading at 8 to 10 times. Today, most of the defense PSU are trading at 40 times. So, but railway stock, where again, order book is very huge, they are trading at 15 to 20 times. So there is valuation comfort. I will not say very comfortable, but yes, for example, IRCTC, many people don't know that they book even airlines. You can book your tickets in IRCTC. Maybe they have not marketed well. If they can market, because they have the lowest charges. When you book air ticket. Yesterday they had an agreement even for Maharashtra state transport. So it is something where they can compete with the private segment. So I think IRCTC, IRCON, where we still feel valuation comfort is there. RVNL in any dip is a possibility. So railway stocks are far better than your defense PSU. So I think some valuation comfort is still there. So you can look at any dip as a buying opportunity in railways.
All right, the last question that I have in 30 seconds on this one. What do you make out next milestone for the markets and the driving factors you think that will take the markets to that level?
I'm a very positive person. So I feel Nifty should be at 50,000 in next 3-4 years. So let it happen.
All right. In that case, we're just going to leave it at that. And thank you for taking out the time and joining us this morning.
Thank you.
It's a record high opening coming in for the markets. Indeed, a great start coming in for Indian equity markets. But with this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the updates, stay tuned to moneycontrol.com and Moneycontrol app.